Hello again, traders, and welcome out. This is Ankit from Currencies here, and welcome to your currency recap for Monday, September the 26th. What a day so far in the market. So a lot to talk about. So let's quickly go in and do a quick market analysis. So as you can see in the market performance today, what we have is a bit of a continuation from last Friday. Markets are still in this free fall. I mean, since this whole CPI release that came out on mid-September, and the FOMC last week, and markets are just on a tear. So we are now actually officially breaking this June support. We are not really seeing a lot of defense coming in this level. On a Friday, we got a nice reversal, but today's candle is not so good. So I think market has a lot more of a downside risk here as we give out this very strong level of support. So tomorrow will be very important, either a continuation or we try to see if we can bounce back into this range again. So that's what we're really seeing in the broader markets. Everything is down across the board. S&P down 1%. VT is down 1.2%. Again, if you look at the cumulative result for the last 2 weeks, I mean, we're seeing markets down 11-12%. Again, big move in a very short period of time. Surprisingly, cryptos were up, but outside of that, gold is down because strong dollar is really weighing down on everything. And look at U.S. oil, down 8% last week and down another 3.5% today. So big moves are happening across the board. But most importantly, we got this pound flash crash in the Asian markets last night. So anybody that was trading or watching the markets really was caught up by surprise when we saw pound down 4.5%. Again, big moves, especially pound was already down 3% last week. And this 4% move was a very aggressive move to the downside. Again, it happened in a very quick fashion, flash crash. That's what we say. You know, if you search flash crash, we have seen this happen in other currencies, but that was a big move down and that totally reversed towards the end of the day. Pound was actually up against the Kiwi. So pound was actually not even the weakest currency today. It was the weakest currency was the Kiwi. So a big turnaround there. And this is what's telling you that the volatility is really high in these markets. So very caution that you have to use, especially when it comes to stop management or picking the right entry point. So if you look at the charts, the World Stock Index again down. We broke that lows back right here, and we are just seeing that continuation. So everything is really panning out, historically speaking. And September is really the worst month for the year, and so far it's proving to be so. We are seeing cryptos kind of holding in here, which is kind of surprising because the sentiment is so kind of bad out there. But we'll just chalk it off here. Again, not really ready to break lower, but it's not really a buy. And again, that's really what you come across when you look at a lot of charts. You know, you might be not taking part in the move, or they're just so overextended that the risk to reward ratio doesn't even look good at that point. So if you look at the market outlook, we are seeing markets again sitting at -2 at this point. I think markets are not really giving any sort of relief rally whatsoever. If you look at the last 5 days of the movement here, I mean, we are down quite aggressively. So tomorrow I'll be watching this market very carefully. If it can close below, again, the today's low in the markets tomorrow, I think we could actually have a bit more of a capitulation move to the downside. If we can try to bounce back up tomorrow, I think we can say that the June lows will kind of stay in place. But at this point, it's a very slim chances. But again, for the markets, you have to be prepared for both case scenarios. Even though the market looks extended, it can actually get worse. And that's exactly what we can get from pound, which looked awful, but it got even worse. So looking at the schedule here, this week is a light week when it comes to news events. Again, tomorrow, Fed Chair Powell speaking, and on Wednesday. I won't be surprised if the Fed Chair Powell try to calm the markets down. And I think this could be a catalyst for any sort of reversal if it tries to come in and start to, have a different commentary that could support the markets. So watch out for that tomorrow and Wednesday. But outside of that, again, we don't have any news event till Thursday, where we have the CAD GDP, and we have on Friday the core PCE price index. So those are the two news events. But outside of that, the markets are going to be driven by the global macro sentiment, the events that are taking place, and continuing with that. So let's do a quick market and currency analysis and see really what's moving percentage wise and where you should be focusing. So cryptocurrency, again, we're seeing a positive day across the board. Only Cardano was weaker. But again, this is smaller bounces in the trending markets that are downside. But let's focus, shift our focus to the currency market. Now, currency market, we're seeing big moves again. Extension in the dollar. Dollar is moving very aggressively, and again, we haven't seen this kind of move in the dollar since the COVID crash back in March in 2020. So the dollar is rising very aggressively and is weighing down on everything else. But outside of that, I know we take a look at this percentage change and it doesn't really do justice. The pound is down 0.34% only. If we take a look at the day today, pound was actually down last night more than I think it was down 4.5%. So big reversal over there. And I think with the pound, we just have to watch out. Be careful about that currency in the next 24 to 48 hours. Now, take a look at the Kiwi. Kiwi is actually down the worst. And it seems like Kiwi is kind of on the same path as the pound is. I mean, it's slowly dropping, not a whole lot of bounces. And again, what we need is a flush out. And that's exactly what we got in the capitulation move today in the pound, where we see a big aggressive move to the downside and we see a recovery. That usually marks an end to a move for the short term. I think we see Kiwi kind of following the same suit here. But outside of that, notice that the Aussie is not doing that. Aussie Kiwi has a big divergence going on. The Canadian dollar was not really a big mover today. But again, if you were comparing anything to the dollar, of course, you'll find big movements. But these as a whole, as a currency basket, they weren't the biggest mover. So dollar was the biggest mover. So it doesn't matter what you were pairing with. Dollar, Swiss franc, pound dollar, even the euro dollar. You notice that there was it still moved up or the euro dollar still moved down by like close to 1%. So big moves across the board. And at this point, we'll have to really pay attention to the charts and see, okay, how further we can get before it actually takes a pause. So until then, we're still focusing on currencies that are moving, which in this point, if you take a look at the velocity scores, we have the dollar as a +3. We have the Kiwi as a -3. Again, this is the currency pair that has the biggest divergence. Outside of that, we have Aussie and pound as a -1. Again, pound, I think you got to watch out for this because a pound with the flash crash after last night, I think it will just try to bounce back and forth. But this is where, when things are going haywire, it's better to steer clear from that volatility because the volatility is really high. Australian dollars a -1. Again, not really seeing that kind of damage that we're seeing in other currencies like the pound or like the Kiwi. But, we cannot rule out that those currencies can take part in that. I mean, we have to just wait and see. I mean, remember, just a few weeks ago, we had the euro being the worst currency, and euro has kind of moved better. So what we are seeing is this is where the play is. So focus on that. If the Aussie becomes part of that, we'll start focusing on that as well. But I think at this point, if you look at that divergence between Aussie and Kiwi, the Kiwi and the Aussie, Kiwi is definitely a better short than the Aussie. The yen, again, still remaining at +2 after that yen intervention last week. A lot of the yen crosses are kind of holding in here. So again, a good positive sign. We have to kind of wait and see if there's a divergence happen between the dollar and the yen. So far, dollar is still a superior currency, but I think if the dollar backs off, we could see the focus maybe go into the yen. So yen crosses still is on my list here. I think right now, just paying attention to what's really in play. And if the dollar remains in play, I think at this point it's a difficult trade. Anything that looks extended becomes a difficult trade because your risk to reward ratio really weakens. So that's really where we need to look at our possible trades in the next 24 hours and see where we can find an opportunity. And, usually we don't always have greatest opportunity. This week could be tricky. The tricky because we are seeing things are looking so extended. And if we just look at it from an RSI perspective, let's take a look at our velocity score. I mean, we have dollars sitting at a overbought level on an RSI. Even look at from the moving averages sitting very far. So At this point, would I want to buy it here? Absolutely not. Because again, if I'm opening a new position, I'm taking a bigger risk, and risk to reward ratio does not look that good. I mean, in just the past 2 weeks, I mean, if you just take a look at the rally that we have seen, I mean, we're rally almost 6%. I mean, we're already getting into these levels where we could see a possible reversal. Again, that reversal, I think, will come if the markets can bottom. And right now, I think this is what I'll be paying attention to tomorrow, overnight, mostly tomorrow, if the Fed Chair Powell comments, or if you try to calm down the markets and if the markets can rally off of that, I think then we can see a bit of a relief rally coming in as well. If we don't see that happen, I think the dollar might continue in that upward trend. I mean, you have to really look back in 2020 as an example, because that was the last time we saw that big run in the dollar, and you can see that it just continued until it really peaked. And that, again, that peak came with the market peak as well. But you can see this one had a like 11% rally, 12% rally in that very short period of time. Of course, we don't have that kind of volatility right now, but again, it's on the same path. The chart looks very similar. So the chart needs to top out a little bit. It's not recommended short right now because the trend is so strong. So if you're looking for a long, I think use for a caution here. Maybe use tight stops, because if the trade is over, then you want to be out sooner than later. If you're looking for sort of a reversal, this is not the time yet. We might have to wait for that to materialize. So dollars, again, remains that case. And again, right now, the Canadian dollar kind of looks like a mixed bag. And it seems like where we are seeing more pain is in the pound, it's in the euro. Euro is not as much as the pound. Again, pound is the one that really taking the hit here. So on a 4-hour chart, we can see we got a big flush down and we got a big rally. Can this continue moving lower? It could. It could resume its trend. But remember, volatility is very high. So make sure you're using the right stops for it. Outside of that, again, the Kiwi it looks very extended as well. And again, if you're trying to buy the Kiwi, very cautious here. Even though the readings looks oversold, but remember, in the last few weeks, we have seen these overall oversold readings over and over again. So we need that capitulation move here where it goes down quickly and reverses back. But right now, these are little dead cat bounces where they bounce a little bit just to only roll over. And Aussie, again, is holding it a little bit better, but I think it could follow that same trajectory if it really breaks that level on the currency basket. So if you really, in the meantime, take a look at when Aussie will be a better short than Kiwi, your focus should be on Aussie Kiwi, because for that, Aussie needs to be weaker than the Kiwi, because that's the only time I'll be more interested in that Aussie short. But now look at the daily chart. Now, daily chart, we are now, I mean, if you even go in at a higher time frame, I mean, we are up highs, I mean, going back to even 2013. So this is what's telling me that there's a big divergence taking place. It's getting in this overbought level right now in the RSI, again, on a monthly chart. But this could actually, have a big swing to the upside before reversing it lower. So that would be the only time we'll take a look at Aussie over the Kiwi. But right now, Kiwi short seems like a better play. If I have to play on the other side, then Aussie long would be a better play. So definitely tricky to really enter new positions. Like I said, we don't want to be going against the trend, but at the same time, finding a big risk to reward trade could be also challenging as well. And if you are still trading, again, if you still want to be trading on the dollars long, I think just use the right stops for it. If it breaks a certain level, then you just want to be out. That's just a way to play these volatile markets. Again, being cautious is very important. So if you're really feeling that FOMO or the fear of missing out, just this is where you have to realize if you are in cash, that's okay, And if you're feeling that FOMO, then just enter positions on your demo account and see how it works out if you're really trying to gain experience. But remember, whenever we see these stretch levels, big volatility, it could go both ways. And unless you are in a position to make adjustments, volatility could not be the best for everyone. If you're trading on higher time frames or not be behind the system all the time, then this is where it's better to be in the cash and just wait for the right opportunity. So I think this week could be tricky. It could stay extended, but again, watch out for Fed Chair Powell comments tomorrow and Wednesday. And if the markets continues to look bearish or looks extended, I think that's really the play here, but not really looking for any reversals yet, unless market gives us the reasons for so. And we'll see that in the charts. So thanks for joining. Again, keep up with the schedule. We'll have more content coming out this week. Till then, take care. Happy trading.